Welcome back to the second half of the Future Show, ladies and gentlemen. We're less than 60 minutes away from the cash open for stocks on Wall Street, and with no data and no numbers being released at the bottom of the hour. In fact, today's kind of limited in terms of economic data. We have the EIA coming out later today, a couple Fed speakers I noticed, and certainly Beige Book will be watched later. But we also have Alan Nuckman, ladies and gentlemen. He's the Chief Market Strategist at Agora Financial, joining us this morning to help us, get ahead of some of the financial markets we've seen and price activity related to. Alan, good morning to you. No numbers today at the bottom of the hour. A lot of Fed speakers today. I guess I'm wondering, first and foremost, is there anything they can tell us that we don't already know? Fed Chair Powell has been pretty transparent and seems to have covered all the bases as of recent.
The number today is 93. That's all it is. 93 in the dollar. The dollar is below the 93 level. Breaking down one more time after that fake out breakout. So a continuation here is very positive for these overall trends to continue as they've been going, even though we had a little bit of a blip in the dollar and some of these trends stall. This could renew this overall downside in the dollar, upside in assets. I like that. I like you diving right into it too, Alan. The dollar is definitely going to be a focal point now, down below 93, and it's actually accelerating a little bit to the downside, down by about 0.5% as we speak. It still has a ways to go before we get down below that 91.70 level. That goes all the way back to the beginning of September. We mentioned, though, here on the show, if we do get some momentum, some energy, and it looks like we're seeing some this morning below 93, that opens up the door for a retest of that level. I do want to get into some of the potential catalysts here behind this move. I mean, ultimately, we talk about how stimulus measures from U.S. lawmakers weighs on the U.S. dollar. Certainly some of the comments that we've heard from the Fed that longer in terms of rates, that is, to the downside, that weighs on the dollar as well. But also, it's interesting because we've got rates to the upside now. We've got the TNX, the TYX, which are on the move. I mean, I guess which should we be watching at this point in terms of catalysts? We can come back to interest rates. That's a whole other issue in a second. But you talk about longer, and you said longer, I think 4 or 5 times. That's how long it's going to be, keeping interest rates down. And you got to remember, we're always one tweet away or one comment away from Larry Kudlow about the dollar, and it could tumble one more time. Again, you talked about stimulus. That is one lever of stimulus, is pushing that dollar lower. So let's understand that that's in a lot of people's interests for that to happen. So we will have to see. But we're at 1 month lows in the dollar. That's a starting point. What I've like to see is, the dollar is, obviously there's a basket of currencies as compared to. You've seen the euro currency move up. You've seen the British pound above 130. You've seen the Canadian dollar firm up. One we haven't seen that I think is a huge opportunity is the Australian dollar. Australian dollar had rallied from 60 to 75. It's taken a pause, and now it's found support at 70. Now, China GDP came out really strong. That was buried by all of the nonsense that's happening around us, but that was buried in the news. Big 5% jump in, a gain in GDP, real strong comeback in China. Obviously, Australia has very much of a tie to China, and that's why you had the sell-off in the Australian dollar that we did. So if you look at it from a commodities play and a China play, I think the risk-reward's really setting up from the Australian dollar to play catch-up to these other currencies that seem to be up and away. Again, you want to see a test of the highs in the euro currency and a test of the lows in the dollar, and that'll tell us a lot. But, that's what I'm looking for.
Yeah, I'm glad you mentioned the Aussie dollar and some of the other foreign currencies that have been on the move. We certainly didn't bury that China news, the good GDP data, as you commented on, also the retail sales, the industrial production numbers were pretty strong there as well. But let's talk a little bit about the British pound, because speaking of rallies, though, also, by the way, in terms of euro currency, I noticed the Swiss franc is also taking out some key levels to the upside as well. But in line with these euro currencies, or the eurozone at least, least, I wanted to talk about the British pound. It's inching higher. We've heard, well, we had kind of a little bit of mixed activity in terms of some of the Brexit negotiations. Earlier in the week, it seemed like they had slowed some, or were heading back towards a hard Brexit, and then it seems like recently they've softened that tone a little bit. But the currency, for the most part, seems to be faring pretty well amidst, we came into a deadline recently, and, well, much like U.S. lawmakers here, they have yet to come to an agreement, and they have a bit of a hard deadline headed their way as well. We're talking the end of the year when things are ultimately supposed to sever.
Of not what happened, but what hasn't happened, which is a lot of times equally as important. That we're back up to the 130 level holding in that British pound. What's interesting is if you look at the ETF that tracks the stock market over there, it's had a 20-year triple bottom at the 20 level. So I think I think again more potential there from a reward to risk standpoint. Looking at their market, which really hasn't participated in the global comeback, and their currency is somewhat stable, even with the news and the concerns that have weighed over it for weeks, months, years, I guess going on a decade now. So again, it's not selling off, and that's the sign that I see.
Talk to me about the yen. It has been stable as well, but it's starting to get a little bit of a lift this morning, Alan. I guess I'm starting to wonder, is there something brewing here when you look at these currencies on the move? The dollar's getting hit here. I mean, the yen, while it's got some hurdles to the upside as well, I mean, this is a big day to the upside. They're up 0.75% right now, 95.50 area, and holding on highs. I mean, no rejection of these moves yet in terms of what we're seeing ahead of the open today.
In the currencies for the last months, with the exception of this dollar firming or essentially going sideways here. Let's talk about it. August, September, and October, the dollar, has been stuck between 92 and 94. We had that fake breakout for about 4 or 5 sessions, and then it's come back inside again. Now we're below the midpoint. From a technical standpoint, the path is down. Now let's get into interest rates, because that's the big component here. Okay. Interest rates are at 4-month highs. If you look at the 10-year yield, that's interesting, and we're approaching the halfway point of that spring high. I guess it's early spring high at 1.25%, and that low at 0.5%. So we're approaching kind of the midpoint of that. But let's remember that the larger overall trend is down. Rates are not going up anytime soon. There is no inflation. So this might be just a slow, gradual, unwinding, short covering squeeze because, at some point people didn't see any more downside. I'm still a skeptic, I guess, or a believer that negative interest rates are a possible lever, and nothing can be ruled out in this environment. So we could make a turn in this. So we're right now at 0.8, and so let's see what the next leg is in this marketplace. But I'm not a big believer that interest rates are gonna rise. And even though we've had a pretty sharp increase, that's up an extreme low. Let's see if we can come down and test the midpoint of this range, and then make another attack on that lower low. Because again, that's the path of least resistance. We gotta listen to what people tell us. People have been telling us that interest rates are going down and the dollar's going down. You know what? I'm ready to listen.
Yeah, fighting the Fed seems to be a bit of a losing battle. Alan, speaking of the Fed, speaking of interest rates, next week central bank activity, it kicks off. It looks like I saw Bank of Canada, I think it was, Bank of Japan, the EU, ECB. I saw, I think, talk to us about any expectations for any surprises there. I have been hearing about potential for lower rates from the Bank of England and also potentially the RBA as well. And lastly, in terms of tying back to that currency discussion, I did want to point out that the Chinese yuan is at basically rallying best levels it's seen since July 18. But next week, central bank activity expectations.
Well, I mean, everybody's in the race to the bottom. Everybody wants to take advantage of a declining currency, and so the question is, how can they do that? But again, the dollar is the gorilla, and where's the gorilla going to go? Is he going to stay in his cage in this range, or is he going to make another attempt on those lows and make a swing for that under 91? That's the big question. We'll just have to watch the prices. I'm not here to predict based upon my opinion of events. I'm a chart watcher. I try and make it that simple. and the trend is down in the dollar, and that's dollar down. Stocks go, go, go. That's
right.
what I'm looking for.
We're watching the dollar, ladies and gentlemen. It sounds like you are as well. Alan will continue to keep an eye on some of the weakness there. The ripple effect is widespread. We always talk about that. Alan, really appreciate you joining us here. A great breakdown and a high energy discussion in terms of some of the recent price activity we've seen. And it's taking or attracting a lot of attention, to say the least, here. So I did want to focus a bit on the financials. Speaking of focusing on the financials, let's dive deep into the charts, ladies and gentlemen.